Welcome to Real Estate Secrets Unlocked, the podcast that takes you inside the minds of the industry's top professionals, revealing their top secrets to success. I'm your host, Danielle Damianov. Whether you're a seasoned pro or just starting out, get ready to learn the latest trends, strategies, and secrets that will help you succeed. Join us as we go beyond the basics and explore what it takes to make it in the world of real estate. So buckle up and get ready for a wild ride. This is Real Estate Secrets Unlocked. Hey everybody, it's Danielle Damianov with Real Estate Secrets Unlocked, and I'm really excited today to have David Morgan on. He is with the publisher of the Morgan Report, and we are going to talk about investing. We're also going to learn a lot, I think, today about currency and how it affects like the market and inflation and investing and stuff like that. And I know most of my listeners are interested in investing, usually real estate. So I'm really excited to talk about a topic that I know nothing about. So hopefully, David, you'll be, sharing with our listeners a little bit of, silver, gold, currency, investing, inflation, all the things that we probably don't really know a lot about. So thank you for being on. Why don't you tell everybody a little bit about like what you do and stuff like that.
Sure. Well, I specialize. I'm a financial newsletter writer that I specialize in hard assets, which means resource stocks like gold, silver, iron ore, copper, lithium, rare earth elements, you name it. We've talked about it, discussed it, and put opportunities, usually on the equity side. So stock investing in hard assets. Also recommend a portion and a small portion of your portfolio in precious metals, just in case, kind of a hedge position. But I'm not anti-real estate. In fact, I'm pro-real estate, but I'm more pro cash flow and capital efficiency. And most investors think in terms of owning assets. I think of terms of controlling cash flow streams. And we could talk about how you can do that in the equity world with resource stocks. Whether it's renting a house or a stock portfolio, the question is how hard is that income to earn, maintain, and scale? And so real estate versus what I do, which is called covered call writing. So you own a company. So if I own Newmont Mining, now I'm not the CEO of Newmont and I'm not on the board of directors, but I am a shareholder. As a shareholder, I own that company. How much? Well, I don't know the math, but it's probably 0.001%. But nonetheless, I own that company. Not very much of it. The point I'm making and trying to be a bit happy about it or making light of it is if I have 1,000 shares, I can rent off those 1,000 shares. And if you do that consistently, you could get about a 17% return on capital. And most people don't know how easy it is. And there's a lot of benefits from my perspective because I have owned rental property in the past. In fact, my father was a pretty big real estate investor. And I started kind of following his tracks. And as a young man, it just wasn't for my personality. I still have some, but not, that has been my main focus. So it's still a tangible asset. You have gold in the ground. You're leveraged because most of these companies have a debt to equity basis, a mining company. There's safety as far as, it's a top tier cash rich, unhedged mining company. And you get monthly income off of that stock, as I just outlined. So a lot of people undervalue the hidden income that you can get from owning an equity. Now, before I give it back to you, this is really for blue chip stocks. There are not options available on like junior mining companies that are out looking for gold, right? Or maybe the next level up that's a junior explorer that might have a good cash balance, but still hasn't really produced anything. So it's sort of, I don't know what an analogy would be in the real estate market. I mean, I don't think you couldn't rent a house that's being built, so
Right.
if it's being built, you couldn't rent it. It'd have to be up, occupied, tax base set, the cost basis known, the cash flow determined, and then you could start to rent it. Kind of the same thing here.
So what you're saying is basically you're not taking on new, it's not a newer company, like it's an established company.
Exactly. Yeah.
Okay, you got to talk to me like I'm five. And because a lot of us don't, know a lot of this. So I have a question though. Are you, so I know that you're a publisher of the Morgan Report. Are you also a financial advisor that you do this for other people, or you just do this for yourself as an investor?
Yeah, no, it's me as a private investor, and thanks for making that clear right up the get go, because there are rules. The SEC is very clear that to take on capital, you have to be a registered investment advisor. I am not. Many of my friends are in the financial newsletter world, which is where I live. You still have a great deal of freedom of speech, so I'm allowed to give my opinion on investments really across the board. Obviously, I'm not going to talk about something I'm not, well versed in, but nonetheless, there is that dividing line. So basically, our disclaimer is, I'm not a registered investment advisor. If you are going to make an investment, check with the registered authority, blah 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 blah. What's interesting about that whole thing is one, I worked for one for a while, had gotten all the prerequisites to go into that field, but once I determined how it really worked, I was really disheartened by it because it wasn't really in the what I wanted as a very much idealistic youngster and the benefit of the client in a lot of times. It was more in the benefit of the corporation that was giving me a paycheck than it was in the interest of the client. Whereas in my business, being a free market thinker, I'm allowed to go anywhere at any time without anyone holding strings to me. So, so there's that.
Which is what I love, freedom, right? The freedom to do what you want when you want without having, anyone telling you what to do. So how did you get into this? Because I don't think anyone is born and saying, this is, where I want to go with my life. And as a writer, right? Like there are born writers. So you're a writer, you're a publisher, you enjoy writing. But this is a very specific niche, would you say?
Oh, absolutely. No, there aren't that many of us. And, like any field, most of us know each other. I don't know everyone in the industry, but most people that specialize in hard assets, I know them by, first name in most cases. And the reason I got into it, I was very fascinated by money as a youngster. And just being as old as I am now, in my youth, the coinage changed from silver, dimes, quarters, and halves to what I call the Johnson slugs. And my dad put that first 25-cent piece in my hand that wasn't 90% silver. It caused some curiosity in me. Now, I'm not going to say from that point in time, Danielle, oh my God, I'm going to write about silver. I don't have any of that in my head. But I was curious about money even before he put that quarter in my hand. And so I started studying on my own as a pretty young kid. And when I found out about how fractional reserve banking works, how loans are created when you make a signature, like when you sign up for a mortgage, you are actually creating the loan with the bank. You and the bank are creating money out of thin air. Now it's backed by a tangible asset. It's backed by land or improved land with, apartment building, single family home, warehouse, whatever. Nonetheless, I was very fascinated by it. So I started learning about why the systems that expand on a debt-based monetary system always have problems later. And that kind of scared me and upset me. And so I started learning about that. And that took me into, of course, the precious metals and why during those times at the end of the cycle, which it repeats over and over, you will want to be in, you want to have some precious metals because at the end, inflation gets so bad, unless you have tangible assets like gold and silver, perhaps real estate can work, especially earlier in the cycle, you're going to be in trouble. So I started to find out about the financial newsletter business. And I was in the aircraft industry at the time. And one of the chief test pilot was reading this financial newsletter to the co-pilot. And I'm sitting in the back seat of the truck waiting to get on the airplane. And this is just music to my ears because this is kind of what I really wanted to do for a living. I love what I did in the aircraft business, but nonetheless, so then, I was a youngster. I mean, I was in my early 20s, just out of college. I said, "Hey, can I get a name or how do you get that publication?" So he told me. So I started following, the field I'm in now. And I found out that there were investment conferences where these guys that wrote these letters got up in front of the public and spoke. And so I started listening to some of these people, and it was really hitting me in the head and the heart. And wow, they're telling the truth about the monetary system and where it will lead and what eventually happens. And I thought, this is phenomenal. So I listened to several of them in that era. You probably don't know these names, you're too young, but Howard Ruff and Harry Brown, who ran for president of the United States on the Libertarian ticket. I became very close to Harry for a short time, right near when he was in his 70s before he passed along. But nonetheless, I was just fascinated. And there's one in particular named Jim Dines, and he called himself the original gold bug. And he was a very prominent young man on Wall Street. And he brought up to his boss, working for someone else, that, if we don't get back to gold, we're going to have a problem later on. And his boss said, "You're full of it. You don't know what you're talking about." And so Jim quit, started as a financial newsletter writer, probably one of the most well known ones in the hard money camp of anyone. So I started to follow him, and then I got to hear him speak. And the speech just basically, it's one of those life changing moments. I don't want to be too dramatic, but it hit me so hard. He started his speech, and here's what he said. I'll never forget it. He says, all that exists in the universe is truth or resistance to it. And I thought, wow, that sounds pretty powerful. And then the next words, I'm paraphrasing, I don't remember exactly, but in the time that I've said that, the government has diluted the money supply, and watering the milk never works. In other words, this inflation that's insidious and pervasive is going to cause problems going ahead. And that's why we need a solid monetary system based on, gold standard or gold and silver standard. So that was kind of a wake up call for me. And I thought, wow, I didn't at that time think, oh, I might have had the thought, God, I'd love to be doing that myself.
How old were you?
At that time was about 25.
Okay.
And,
So you've been
had,
in this for a while.
oh yeah, well, I didn't start on the web until I was 1999. So, whatever age I was then. So I worked in the aircraft industry for over 10 years, but I always traded futures and had a side gig working for a financial planner, as I said earlier, had a real estate license, and an insurance license. So I moonlighted in the industry kind of on the periphery while I was doing my main work in aircraft. But then when I left the aircraft industry, then obviously went full time. I worked with that certified financial planner, said, this isn't for me. And I just took a leap of faith when I started working. I actually put up a web research page before there was a browser. I was a very early adopter. I have been, um, from the get go. So I put up a research page, and about 6 months in, this guy found me. I don't know if I had my phone number on there or not. It must have. He found me somehow, called me up, or maybe he emailed me and I called him. I forget. But anyway, I made contact, and he says, "Well, what do you do?" I said, "I write a financial newsletter," which is more or less a lie, but that's what I wanted to do. That's what I planned to do. It's how I wanted to make a living. And he said, "Well, how much is it?" Now I've been in business for 12 milliseconds. I don't know what to say to this guy, but I know the industry. I've been reading newsletters for decades now at this point in time, and I knew what the price structure was and everything else. So I threw him a number. He said, "That's fine. I'll sign
What
up."
was the number? I want to know the
Like
number.
$60. Silver was $5 the ounce at the time. So I thought an ounce of silver a month is a good pay, right? So $5 a month times 12 is $60. So I thought I'd always keep it at an ounce of silver per month would be my cost basis. So he said, fine, sent me a check, and I levitated almost. I'm exaggerating, but I was high. Oh my goodness, I'm doing what I want to do. I got my first customer. Oh, this is great. And then I did the one-handed slap, the one-handed salute. I go, wait a minute, what did I just do? Am I out of my mind? I just told one guy that I'd write for 1 year
I love it. The cart before the horse.
everything I know about precious metals and the resource companies for $60. That doesn't sound like early retirement. So I
Well,
started
what
out.
would it be today? Let me ask what it would be today.
Well, right
An
now it's
ounce
500
of,
for the basic service, and it's 1,000 for the premium service. And then for accredited investors, we have a special service, which is not very many, up like 40 people. And
well,
that's
what's an ounce of silver today?
oh, an ounce of silver right now is $80 an ounce. So 8 times 12 is 580.
Yeah.
Yeah. So
So let me talk to you real quick about market cycles because you said
sure.
something that was interesting. And so I got started in real estate and mortgage in 2001. I graduated from college in Boston, moved to Florida, got started right away. And then market was booming and then the market crashed. In 2007, I owned a real estate and mortgage company and it was just literally, the market. We all know what happened in '07. So I said to myself, history repeats itself, right? Like this is going to happen again. We are going to see an economic crisis like we did in 2006 and 7 again. And you made a comment, and it just kind of got me thinking about market cycles and when you need gold. And then you also made a comment about real estate and when having real estate early on in the cycle, which I agree, because when you're in like after the crisis, the real estate is low, that's when you want to buy. It's going to then go up, you're going to hit a peak again, and it's going to go back down. Like that's just kind of the cycle. Um, when would you want to buy gold, precious metals? What part of like, and I'm using the real estate cycle because that's what I know.
Yeah.
So can you kind of talk within that? And it seems like it's about every 20 years. And I don't know if you agree with me on that. I mean, you're older than me, so tell me what your thoughts are.
Well, your intuition is very good, and I'm really happy you asked this question. So I'll tell you a story, a valid one, not a fiction, a true story, and then we can drill down further if you wish. So there was an event in the Yukon, which is it's a great northwest of Canada, a lot of gold mining in that region. And there was an event called Gold Rush 21, and that was in the early 2000s. Myself attended, many people attended that. One of the people that attended that is named Mike Maloney. Mike Maloney is the founder of goldsilver.com, which is one of the largest bullion precious metals dealers in the country. But it didn't start that way. So we had the 3-day event. Mike said, and we knew each other from the Silver Summit and then being involved in precious metals for a few years, a couple of years maybe. And he said, "Hey, can I have breakfast with you? I want to talk to you." I said, "Sure." We, like I said, knew each other. So yeah, we had breakfast. So hey, I'm going to start a bullion business. My goal is to have a very prominent, position as a bullion dealer. Do you have any advice? And I said, "Yeah, Mike, I do." One, to me, it's kind of a boring business, but to each their own. But no matter how much you believe in the precious metals, you are in the spread business. You warehouse precious metals and you get a spread between the buy and the offer, just like a real estate agent gets a cut on the sale. So hedge every transaction, because if you think it's going up or it's going down and you think you're going to lose. But if you hedge and all you do is take that spread, take that 6% every transaction, you will be successful. And that's the only thing that I really told him. So we get on the airplane to come home. I'm sitting with one of the most prominent fund managers in Canada, John Emery. We're talking about the end of the world and why gold's going to be so powerful. Well, Mike is writing a letter to Robert Kiyosaki, well, the real estate guru of all time. And he convinces Robert that housing, real estate is peaking and gold is at a bottom. And Robert somehow or other got the letter and invited Mike in and made Mike part of the Rich Dad team and started putting Mike on stage all over the place in front of thousands of real estate investors. And Mike went through the cycle and they showed the chart. Real estate's here, gold's here. Maybe you should take some profits here and buy over here. And he just got inundated. I mean, he'd do a show for an hour on stage, and it'd be 3 hours after the show of people asking questions. and he
I
sold a lot
probably
of
have seen
metal.
him on stage.
He sold a lot of metal to real estate investors. So there is a cycle between the two that you could take advantage of. He did it in public. It's on the record. No one could dispute it. And there are a lot of real estate investors that never knew how to spell the word gold. I'm being facetious. That learned about it from Mike, that took all their profits, partial profits, some of their profits, and on intuition, on his analysis, on whatever reason, decided to go ahead and put some money in the precious metals. And of course, to this day, I'm very, very happy. So I believe you
Now
can
that
have
they
both.
take the money out, do you take it out or do you let it ride? Like,
You can cycle between them. I took, again, I mentioned Harry Brown, and it's Browne if you want to look him up. Uh, Harry had what's called the permanent portfolio, one of the best strategies I've ever seen for common sense investing. So he breaks it up into like real estate, precious metals, stocks, bonds, and you have so much percentage of each. So a year later, you look at your portfolio. Now, real estate's been flat, gold has doubled, stocks have gone up 10%, and bonds are down. So you look at the percentages. Well, now that 10% in gold is at 20%, and your real estate portfolio is let's say it's down. So what you do is you balance the portfolio once a year. So you've got more than 10% in gold. You sell enough gold to make that 10%. You take that percentage, that doubling, and put that into real estate to make it 25% of your portfolio again. It's really a very simple, easy to do, back the envelope strategy that's basis for inflation, deflation, stagflation, or we're going nowhere. So it really works in almost any economic environment. Is it perfect? No. If you know it's an inflationary environment, you might want to go all gold, but that's kind of stupid. So if you take a long-term balanced approach, which, nature preaches balance. If we have the right nutrients, we keep it an even weight. We're happy. We've got all the nutrition we need. We got a smile on our face. We overeat. Okay. We're lethargic. We're not doing it. We don't eat enough. We're hungry all the time. So there's this balance. I use that analogy just like a
yeah.
portfolio. People think, oh, well, and I know, and I have friends that are like mostly real estate. That's fine. I'm not going to tell anyone what to do. I'm too much of a free market person. However, I think when you have that, real estate cash flow rent coming in and it's all pretty good, maybe you're wealthy enough to have a property manager so you don't have to worry about the toilet backing up and that kind of thing.
I'm just
Uh,
thinking that.
you got that. And that's fine. But you're in a situation where you've got it balanced out. And that's really now for me, if you're going to subscribe to my service, look, you're getting one part of that big picture. You're getting a very, very, let's say, specific and well researched, and my whole life basically drilling into a specific sector. But oh, I'm going to go with David, and that's my whole portfolio. That is a mistake. That's not. It's a
Hmm.
part of your portfolio that's going to do well, but it's not the total picture.
Right. So where do you see gold right now?
See it as fairly valued. Gold has been as high as 5,500. We're in about, I think, 48 right now. It made a very big run in 2025, up about 65% or so. Uh, we're consolidating. It's going sideways. I think if you don't have any gold right now and if you don't have any gold right now and you're a pretty substantial investor, I would suggest getting some. 10% sort of the best for most portfolios. So if someone called me up, so what would you suggest right now? I'd say maybe 5%. Why not 10? That's what you always recommend. You've said it publicly 1,000 times because the market could go down, but it could go up. So if you buy 5% and the market comes way down, you could just buy the other 5%. You got a pretty good position at a average cost that's pretty decent. If it goes up, you can do the same thing. If gold takes off and gets above 5,000 and stays there for like 3 or 4 days in a row, that's about 80% probability it's going to continue to go up. All right, I bought it
Right.
at 45 or 48. It's over 5. Now I'm going to buy the next 5% now. I'm in at 5. And and again, it's 10%. So if you got 90%, let's say 45% real estate, 30% in stocks, you got, 10% in precious metals or and resources, whatever. So that's the approach I would take,
S-
because the problem that I run into is people say, well, and it's not me, it's the sector. I'm a messenger really, but they hear me or someone like me, hear Mike Maloney. I mean, Mike does the Hidden Secrets of Money, which is something I think everybody should watch his series on that. And they get
where
really,
is that series? Is it YouTube or
it's on YouTube, Hidden
okay.
Secrets of Money. And they get very enthused and say, oh my God, I need gold. And they drop everything and they cash out, half of their stock portfolio, buy gold instantly, and they buy it at the wrong time, the wrong kind. They make a rookie mistake. So you don't want to get emotional ever on any investment,
Right.
real estate, precious metals, stocks, whatever. But nonetheless, that's what does happen from fairly often, unfortunately. And then I get these calls like, oh my God, I wish I would listened to you first. I panicked. I bought from this guy. It was the wrong kind and I got ripped off. And no, 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 no. I want to make there is negatives in all industries, not just precious metals. For the
Right.
most part, most are good, honest, hardworking, ethical, but not all of them. So you do have to be careful.
Yeah. So I want to ask you one final question, and this might have nothing to do with anything. It just gets me thinking, and I know that you think of currency and systems and stuff like that. So my kids are 17 and 18. And what's funny is that they don't want money. They want money, but like paper money, if I try to give them money, like actual money, they don't want that. Or change. They're like, what is that? Like they don't even like, I swear, they're like, I don't, what am I gonna do with this? Like they don't get it, right? And if that's a 17 and 18-year-old, and now we have everything, on our iPhones, on the where do you see currency going? And maybe this has nothing to do with anything, but I'm just kind of like, where's the money going to go? Like these kids don't even want it. They're like, can you deposit that into my bank account so I can use my cell phone to pay for things?
No, that's another really excellent question. I mean, here we go, and this will take a lot of time, but I'll try to just give you the Cliff Notes version. It depends on your worldview. So, but you're asking me, and so I get to express my opinion. At the end of the great inflations, there's always a new monetary system. And so we're pushing toward that new monetary system, which is more or less a cashless society. Now people say,
Right.
well, wait a minute, I have cash, but my kids don't want to use it. Just mom, just put it in my bank account. I want to handle the cash. And so the real cash transactions are really a very small percentage of the system. Almost everything is electronic, and eventually it'll be all electronic. Now, from there, where does it go? Well, a new system could implement what's called a CBDC. You might have heard of that, central bank digital currency. But we're going into a new system that will be probably all electronic and everything will be done through your phone. You want to really get a good idea of where it is or where it's headed. All you have to do is study the China banking system for a couple hours, watch 2 or 3 videos, maybe. You'll get a pretty good idea, because everything in China in the cities is a cashless society based on Tencent or WeChat, which is their phones. And in fact, some of the convenience stores, Danielle, you can go into them without anybody in the store. You walk up, it's locked, it's facial recognition, the door opens because it knows who you are. You walk in, you get your Pepsi and your chips, which they probably sell junk food in China, or whatever, your chapstick and your, alcohol, rubbing alcohol. Throw it on the little plate. It charges you. You hit your app and you're done. However, if you forgot your phone or your battery's dead, all you have to do is put your palm on the scale and it knows who you are, because it knew who you are coming in with the facial recognition, and it knows who you are from their system, and it charges your bank account and you walk out. So no
This is
cash.
so crazy
That's the
because
new world. New
I
world.
have to tell you, I came up with this idea. I'm like an idea person. I come up with ideas all the time. And I know this idea is probably a million people have the same idea, but I'll just tell you real quick. I was in Cape Cod, Massachusetts, and I was going for a run, and I didn't bring any money. I didn't bring anything, but I was dying. I was so thirsty. And I was like, oh my God, there's a convenience store. And I said, I wonder if there's a way that we could attach our credit card to our index, like our fingerprint, so that I could go to the store and literally pay with my fingerprint that's attached to my card. And I was thinking all of this stuff, like my sister-in-law works for Fidelity and they deal with fraud. And I'm like, this would eliminate fraud. Like my brain is going down like this crazy, spiral. But I thought about that and it had to have been at least 5 years ago, just because I was dying of thirst on a run, had no money, and I was like, I wish I could just pay with my fingerprint.
It's
So
there. It's not ubiquitous. It's not pervasive. It's not everywhere at all times, but it's moving that direction. Yeah, it should, I've talked about that in other interviews quite a bit actually. And, there's pros and cons to it, in my opinion, but nonetheless, that will, it's good as far as convenience. There's no doubt. And it's good for fraud. There's no doubt.
exactly.
What's bad in my view is that it also becomes programmable. So, have you heard of the social credit score in China?
No.
The social credit score is basically how much you align with the authority figures in China. So if you are a dissident and you're a free market thinker like me and you think maybe there's too much authority over your daily lives and you put that into a blog in China, you might be frowned upon and they lower your social credit score. So now it
Oh
doesn't
wow.
become a financial freedom thing because real estate investors think, well, financial freedom. I get cash flow of 25,000 a month. I'm financially free. I can go on vacation. I can write a book. I can give to charity. I can go on a lecture circuit, whatever. I'm free. Well, that's mostly true, but now with the social credit score, it doesn't matter how much money you have in the bank in China. It depends on how aligned you are with the system. So you could be very, very wealthy, but a dissident, and you are prevented because it's programmable money from getting a five-star hotel or getting your kids into a private school or riding first class or even renting an apartment if you're really low on the scale. So that's what concerns me on the negative side, that
Right.
gives the money powers more power than they already have. As far as I'm concerned, once I learned fractional reserve banking and how the system works, I was like, wait a minute, this isn't serving the people, this is serving the bankers. And
Hmm.
and I did a documentary, I'll throw it out there, silversunrise.tv. It's for free. It's not as good as Mike's Hidden Secrets of Money, but it's more on the spiritual side of money, on why we need to be more thoughtful and heartfelt on how we do our businesses because we want to have the power of our labor. We don't want it usurped by the banking authorities, basically.
Right. Well, this got very interesting. And, to be honest with you, I was like, I don't know much about precious metals and, and other types of investing, but this was awesome. Like, I learned a lot, and I know a lot of our listeners are going to learn a lot also, especially towards the end of this conversation, with the markets and cycles and stuff like that. So I really appreciate you being on. Where can people find the Morgan Report if they wanted to start following you?
Yeah, the best is just the domain,
The more,
themorganreport.com. It's a
okay.
three-step process. Step one is getting our free report, which is obviously low cost. And step two, there's two documentaries, one I just mentioned, silversunrise.tv. Before that, there's one I'm in called The Four Horsemen. And that's a 1 hour and 20 minutes. And that was like a super education on the cycles of the rise and fall of empires. And that's where we are. We're at the twilight of the American empire. Make America great again? Well, maybe. I'd love to see it. I don't see it. But nonetheless, and it's nothing to fear. In fact, knowledge is power. So if you know
Right.
this cycle repeats over and over and over again, and where we are in the cycle, now you've got that knowledge and you're not as fearful. It's like, okay, this is what happens. Oh, after overvalued assets come down in price, we kind of start over and we get a more solid ground and we actually have better communications and better, let's say, I don't know, better wherewithal with our community rather than everything being on a screen. And we
Right.
rebuild and have go through the cycle again.
Yep, exactly. history repeats itself and everything is cyclical. So thank you so much for being on. It was a pleasure to have you on, David. And themorganreport.com for anybody that wants to subscribe to your newsletter.
Thank you so much.
Bye, everybody. Well, that's a wrap. I hope you enjoyed today's episode of Real Estate Secrets Unlocked. Don't forget to subscribe to our show on your favorite platform, and we would love your feedback. Check us out on social and let me know what topics you want more of. Don't forget to like and subscribe to our channel and our show. I'm your host, Danielle Damianov, and until next time, stay motivated, stay excited, and keep growing in this crazy world of real estate. Thanks for listening to Real Estate Secrets Unlocked.